For Ramdeo Agarwal joins in to talk about where he sees the market headed. Ramdeo, morning, it's looking like a breakout these past few days. What have you made of the big up move we've had?
No, I'm also positively surprised by last 2 days movement. But I think the backdrop was developing for this kind of move, in the sense that foreigners have been relentlessly buying, and monsoon has been good. Earnings season, though it started off very badly, and broadly there were a lot of underperformers and the outperformers, but still I think thanks to JLR result, overall it looks to be alright. So I think just the foreign buying is so much,
Morning, Ramdeo. We saw a big rally in cement after a long time yesterday. We were just discussing that sector. Where do you stand on it?
I mean, the news from the sector is not that encouraging. Dispatches are bad, and I think in Mumbai the prices moved up. So I think my sense is that market is looking for anything which is a little underpriced and not followed up so far. So I think it is too much of underperformance to the market that it gave a catch-up kind of thing. But if you check the broader market, I don't think there's so much of encouraging demand and encouraging price movements. No.
There may not be any retail euphoria in the market yet in terms of participation, Ramdeo, but in the way some stocks have moved and captured valuations from intrinsic or underlying businesses or assets, are you getting any sense of euphoria which is building up?
No, I don't think so. I mean, we run one of the largest retail chain, and we have more than 500,000 customers, but still participation is very muted. For last 1 month we are seeing bit of participation in terms of slightly higher volume, but I mean any kind of enthusiasm, to call it, even term it as enthusiasm, is a lot of exaggeration.
On your point about liquidity though, Ramdeo, I mean, year to date India has now got more than 50% of the money that's come into the region. Any fears that this is becoming an overcrowded trade?
It's tough to say, but it looks the kind of, I mean, what is happening is that if you talk to the guys among the larger emerging markets between India and China, China's story is somehow gone a little sour in last 8-10 months for whatever reason, whether it is dispute with, this trade disputes, emerging trade disputes, or, I mean, the story is not sustainable, but somehow China is not hot among the, larger hedge fund managers and all. But India's story is looking better and better in relation to other stories. So I think the inflow is matching up to that, and the kind of risk-free rate US has achieved. My sense is that inflow here will remain strong, and we might end up, I don't know about other regions, but in India we could get anywhere around $20 to $25 billion for the whole year.
Given that liquidity inflow, Ramdeo, and given the fact that at least headline earnings may not be pulled down too much, would you say there is a case for the market to move significantly from here on, 10% plus?
In the short run, once the size of the liquidity and even the foreigners, they get interested if the movement is positive. So I mean, if the liquidity push is there from the global side, I mean, anything can happen. 10% is quite possible. If we keep buying 500 to 1,000 crores every day relentlessly, so where is the stock? I mean, that kind of liquidity push will definitely take the stocks higher. Whether the earnings will support or not, that is a big question mark.
Given that there have not been significant earnings upgrades at the end of this quarter and everybody's still stuck in that 1,020, 1,030 kind of EPS for the full year, do you see a situation again where the Sensex starts trading at 20 times current year's earnings estimates like we saw in the end of 2007?
Yeah, see, in March of 2010, we were in any case trading at about 20-21 times. Now the issue is that in the current year, we are talking about 25% kind of earnings growth from 830 to about 1067, 1068. What is happening is this 4-5 consolidated, the global numbers like Telco, Tisco, your Bharti and Hindalco. These four are now become $10 billion kind of outside investment, and they are not in the grips of analysts at this juncture. So that is a very big swing factor. Like the way JLR has come back and the kind of demand they are talking about, it can surprise in the aggregate. So if they do about 1050 kind of EPS at the 10-11 in March, there is no reason why we cannot command again 20p multiple what we commanded in March 2010. Because by that time, I hope inflation will also be much more subdued. In March 2010, inflation was very high. So interest rate was looking up, but as the inflation comes down to more like 6-7% or maybe even lower, you will see kind of a much better P multiple than what we saw in 2010.
So far the leaders have been the banks, Ramdeo. Do you see any kind of exuberance in bank valuations, or do you think they can justify even higher levels?
I think it can justify higher levels given the level of competition. I think we talk about inclusion, but the RBI, out of abundant caution, has not been able to expand, allow the banks to expand to a level where there is a true competition for the banks. So what is happening is that the bank's coverage, effective coverage area is not expanding, and economy is expanding in the non-covered area, whether it is rural economy, semi-rural economy, and there is literally no bank coverage. And that can happen. We can have another revolution like telecom revolution in banking if RBI and the government takes it up in the right earnest. I'm not saying that you must blow the caution to the wind, but there is a need for a massive increase in the competition for the banking, and so the competition is less, and hence in a resurging economy, banks are going to do very well.
What is your takeaway for the two key protagonists now, Sesa Goa and Cairn, after the Vedanta deal, Ramdeo? And do you think the market's concerns about Vedanta as a new promoter are warranted?
I think if you look at the groups, all the 3-4 acquisitions in the past, they have turned out to be brilliant in terms of it has worked out well for the shareholders, minority shareholders, as well as for themselves. So obviously, I can see two factors for this deal. One is the lowest cost of money. At 230, 240 bits above labor is kind of very, very low. So that's one starting point, and large amount of money is available for viable companies like Bharti or Vedanta or wherever there is a cash flow and supporting balance sheet. And second is probably they know about this business or what they want to do with this business. They want to take them globally because there is a competence in Cairn to do full scale, full service, from exploration to production kind of thing. So they have been very smart in terms of buying assets. So I would think that they know what they are buying at what price.